Hello, folks, and welcome back to another episode of the Daily Crypto Byte. Today is Thursday, April 14th, last trading day of the week for the traditional equity markets as the market will be closed tomorrow. We've got rates moving today, Treasury yields up big, and also the dollar currency index also moving today. We'll talk about that and what that could possibly mean for Bitcoin here today, but also ETH 2.0. Lots of discussion around that. And it's delayed yesterday. We'll talk about that and what that means for Ethereum and the impending upgrade. So before we get started, CJ, how are you doing today, my friend?
To talk about ETH. Also, there's a report from Coinbase Institutional about ETH, looking at how some of these staking yields could change post-merge and some of their estimates, what they would be. Excited to get into that. And then we also have this site I want to showcase that will actually show the process and estimates of how ETH actually becomes deflationary after that merge. Of course, we did have the news yesterday that it was delayed. We'll go into that as well and more. But do you want to start us off? You mentioned DXY is up quite a bit. Same with yields. Obviously, we're seeing a little bit of a pullback in the traditional markets and Bitcoin as a result of it.
Yeah, let's start there because that really has been an important factor in the markets over the last couple of weeks here. We've been talking a lot about Bitcoin's relationship with the Qs, but so much of that comes down to what we see in the Treasury yields. So let's just take a look at the TNX because this is the biggest mover of the morning, up 3.5%, pressing right up against that critical level at which we got rejected just a few days ago. But I think that looking at what we're seeing today from the TNX and looking to see what has happened historically on days of comparable performance to the upside, I think what this is telling us is that we need to approach today and even tomorrow with a little bit of caution because the last time we had this significant of a move in the 10-year Treasury note was just on April 5th. And if we look at what that meant for Bitcoin in the day that we had this and then the next day when we gapped up, just taking a look at Bitcoin, that was two of our most negative days of the last couple of weeks here. So this is April 5th. As you can see, it kind of marked our breakdown below that 45K level and really marked the start of some pretty serious sell pressure. And a lot of people do attribute that to the rise in the TNX, its ability to make new highs. And that also coincided with this date here, April 5th. This is when the TNX broke into local highs here and really kind of spooked the market. We are in a very similar situation here where we're approaching previous all-time highs where we got rejected, and that rejection allowed the market a little bit of breathing room. But if we do break above this level here, continue to enter into local highs here for the TNX, I think that will likely dampen any momentum we're seeing in both the Qs and in Bitcoin as well. So already today it's translating to some negative price action in the Qs. I saw some members of our community discussing that, TNX up 2.5%, probably has something to do with the Q's weak opening. And I would completely agree with, Steven's sentiment here that a lot of the reason why the Q's are failing to open up this morning is because of what we're seeing from the TNX. Yesterday we did have a pretty nice day in the Q's. A lot of people were hoping for, some continuation up to this moving average. But I think any hope of that was kind of squashed by this strong move this morning in the TNX. And, last thing I'll say is that the DXY also making a strong move along with the TNX here, getting above that critical $100 level. And this is another one that, on April 5th broke into new all-time highs here and really kind of marked a risk-off shift in this market. That's when Bitcoin really sold off below that 45K level, pulled back hard. And now we're seeing a similar break into new all-time highs here, breaking above that critical $100 level. That, to me, says the market is looking to go risk-off today. So, that's pretty evident. I could have skipped all this discussion and just looked at the watch list here and just taken a look at the sea of red. That in itself will tell you the market is risk off, but I think the DXY and the TNX are telling us a little bit why this market is, halted a little bit today. So our momentum is slowing down a little bit, pulling back. Alt's getting hit pretty hard here today, but that just is the nature of the relationship between the yields, the Qs, and Bitcoin. And I think, the more we understand that relationship, the better understanding we have of where price may be headed in the future. So that's what I'm seeing right now in, the greater equity markets and, Bitcoin's relationship with the yields. But CJ, very excited to hear about ETH 2.0, and what's going on in that realm of crypto.
Yeah, it could be a much needed catalyst, but interested to discuss that as well. Still holding support though, I got to say, despite yields going through the roof. So that's kind of favorable for the NASDAQ. Regardless, let's get to some news around ETH. This broke yesterday, and I'm glad it didn't, I was surprised it didn't affect the market more to the downside. Obviously, this is kind of, I guess you could almost think of it maybe like how we used to deal with Bitcoin ETF news or potential price lead ups going into the ETFs. Except this is more like a halving, I think, because you're switching Ethereum ultimately from a mildly inflationary currency to now purely deflationary, which is mathematically equivocal to like a triple halving in Bitcoin. So that scarcity is something I think is really important to be excited about and to watch very closely, even though we have had a delay here and that it's no longer expected in June. So according to core developer Tim Byko, the network's much anticipated shift to proof of stake may not come until the fall. This was published in a tweet yesterday. It won't be in June, but likely in the few months after. No firm date yet, but we're definitely in the final chapter of proof of work on Ethereum. So no surprise, it's hard to rush ETH devs to pick a certain date or to have something really nailed down, because I think the classic developer saying is it'll be ready when it's ready. And I completely agree with that. The future of finance that is supposed to last for at least the next 100 years plus should not be rushed just because of short-term price fluctuations. Either way, regardless if it takes until the fall, I think there's still some really interesting stuff and opportunities leading up to it. Also, I think the layer one trade is not necessarily going to be threatened by ETH and the merge into 2.0. And because of the delay, I think we're still going to have those be even more prominent as they continue to build out their ecosystems. But this is a really interesting report from Coinbase Institutional. I definitely recommend you guys check it out for a longer read. But you start by saying, ETH staking post merge. What are the yield estimates and risks? So one of the risks of ETH 2.0 was that you're going to have about $30 billion of ETH that is currently staked for ETH 2.0 on the Beacon chain will be able to be unstaked and unlocked. So a lot of people will say, that's bearish. People who, locked their ETH up at a price of sub $1,000 or sub $2,000 now have the ability to sell or will have the ability to sell above 3K, presumably. Wouldn't that lead to a lot of sell pressure? Well, the answer is a little bit more complicated than just no. And that namely has to do with the APR. Currently, you're getting rates of roughly 4 to 5%. However, post-merge, these are anticipated to increase to 9 to 12%. So you're actually getting basically a doubling in the interest received for staking. And obviously you will have natural sellers who are taking profits after years of an investment, but I think you also have to understand the new demand, especially from institutions, that this has the potential to bring into the space, because no one wants to be first, especially very large and archaic institutions. They want to make sure things have been executed. There are no bugs in code, no vulnerabilities. We don't want to see a DAO 2.0 like what happened in 2016. Not that that would happen, but the risks are there. So they don't want to be first. They want to wait. And once that legitimacy is set, I think you're actually going to see more institutions and more demand jumping in, which would then probably offset any sell pressure from long-term ETH stakers. So quite interesting, worth a look. Once again, this is at Coinbase Institutional, and some interesting data to check out. Also, a site that is worth watching leading up into the merge is Ultrasound Money. And I like this because it does a really cool graphical representation of the inflation rates and then projected deflation rates post-merge. So as you can see here, on a 1 day time frame, actually, why don't we go to the 30-day? So 3.1% inflation per year based on the 30-day supply growth. But if we simulate merge, this will actually decrease to negative 1%. So we officially go deflationary, which is incredibly bullish from supply side dynamics. Of course, you still need the demand, but I think that will come, especially as yields increase for staking and verifying the network. Also, you can see the burn leaderboards where the most transactions are basically occurring. You can see that OpenSea is still by far leading. And it's quite astounding, really. You look over the past 30 days, roughly over 136,000 ether have been burned at about 3 ETH per minute. And when you switch this to USD, that's left over $400 million, and roughly $10,000 per minute is being burned of ETH. So that scarcity and the reduction of supply is really, really profound. And if you look at the totals here over the past 100 or the past 251 days, $7 billion of ETH has been burned, and this is only going to continue. So when you see the predictions of 5K ETH or 10K ETH, it's it could be very interesting. It doesn't seem too far out of the realm of possibility. Plus the estimate, the price prediction from that Coinbase institutional report was roughly $5,000, which I think is quite modest or quite conservative. Typically, you have, the run up, which is overshoots the estimates, entirely, and then, once the excitement dies down a little bit, usually you'll get a little bit of a retrace to that fair value level. Always just kind of assume prices are not trading at their true, fair value level. There's always a distortion in the market.
Yeah, absolutely. And, I can't remember the last time people have been this excited or, there's been this much anticipation for a crypto upgrade. But I really think this speaks to kind of the flexibility of Ethereum, because not only is it, fundamentally changing as a network, but the way people are perceiving it and the way people are perceiving its future value proposition is shifting entirely from, a more utility based blockchain where people build things and, create smart contracts to a more store of value use case. And I think that will resonate with a lot more people, like you said, institutions and funds looking to, lock away ETH for the long haul, get access to both that, positive speculation and also that 9% APR. I think that's definitely a massive use case that we're going to see gaining a lot of traction post merge. So really exciting stuff. Thank you for that breakdown. And also we have an article coming soon, possibly tomorrow, about ETH 2.0. I'm going to walk you guys through it, why it's important, what we think it could, mean for the cryptocurrency market. So be on the lookout for that. But I think that is all we got for today. Any parting words you'd like to wrap today's show up with, CJ?
No, it'll be interesting to see how price reacts once the stock market and just traditional markets close this weekend, starting with tomorrow. So could be quite interesting there. Otherwise, thank you guys for watching. Really appreciate it. We'll see you next time.
Take care, everyone.